ATER stock, Aterian Inc. It closed the session of the 7th of December 2021 at $5.47, a gain of 19.19%, 8.8 million shares across the tape, which is regarded as above average. But over the last 90 trading sessions, the volume has been the average volume is 20.108 million shares. It's only above average because it is more than what the 10-day average is indicating. And what we know for sure is that the underlying trend for the stock is very much bearish, and also it is also one of the popular stocks that people are expecting to be squeezed. Yes, short interest currently stands at 15.12%. It has increased by 11%. Yes, the float is about 41.2 million. So yes, we know that it seems, because we haven't found any other news, it seems market participants may have been provoked. The folks who are really keen on ATER stock, they may have been provoked by certain sort of criticisms concerning the stock. You can see that the folks here on Motley Fool, they've been writing, and indeed other publications, they've been criticizing the stock, even talking about bankruptcy and all that stuff. So all of these provocations will even entrench the positions of those who want to squeeze out the short sellers. So it is a collective drive to push up the momentum. That was probably what is behind this 19.19% we are looking at right now. And going by what happened today, this is not all that it gained. It actually gained more than that. You can see. So having closed at 5.47, it actually reached 5.72, or it may have actually gone higher than that, because what you're looking at right now is the 5-day chart. So interestingly enough, there's a pattern that has developed on the stock since early yesterday in yesterday's trading, yesterday the 6th of December. So we can see here the stock, as at 9:40 a.m. the stock was trading below all of its moving averages, all of them, but specifically below all of its specifically below the 10, 20-day moving, 10, 20 and 50-day moving averages. And after that it spiked, and when it spiked, it never really fell below the 10-day moving average for quite a while, for about, call it a good number of hours. You can see that from 9:40 thereafter, from 9:45 thereafter, the next time it fell below that 10-day moving average was 1:25 p.m. and then in the same session 6th of December, it fell again below that the 10, 20 and 50-day moving averages. And okay, that was where it closed. It closed that session just below all of them, and then at the open of this session, the 7th of December, it spiked, and as well, pretty much doing the same thing almost always, just never really falling below that 10-day moving average. All of these are the sort of patterns that will ensure the stock will continue to feed on itself. The algos, and as well the effort of the human market participants, ensure that it climbed steeply, and yes, at some point it now fell below the 10-day moving average, but again we can see another pattern again. It fell below this 10, especially the 50-day moving average, the 10, 20 and 50-day moving average. In this session it fell below and then started to spike. Going by these two patterns, we have seen, do we expect to see the stock spike again? Is that a possibility? Let's just assume that this is a pattern that will continue to repeat itself. We can just simply determine the sort of price target we are looking at here based on the fact that we expect that it will continue to extend. It has fallen below its 10, 20 and the 50-day moving averages. It will spike again and extend further. So assuming that is what's going to happen, let's now determine what the price target we are looking at here. So we have this high of 5.74 and we have this low of 5.23. So let's determine the difference between those two prices. 5.74 0.74 minus 5.23 will give us 0.51. So we just use 2.618 extension level. You can use any other one you want. We're just using that one, so that will give us 1.3351. So we add it to the current price in this session. In this post-market session is unchanged, so we're sticking with that 5.47. So we add 5.47 to that 5.47, and we have 6.8, roughly 6.805. So 6.805 is our target. And that's and going by that, it's a price level that hasn't been printed on this 5-day chart. So it looks like something that can work out. So let's, fingers crossed, let's see what's going to happen in this session, the session of the 8th of December, whether it's going to extend and reach and exceed $6 and some fraction, based on what we have seen, based on the pattern it has plotted. You never know. The algos, they are already reading what we are reading right now. And indeed market participants, they are reading that, and also the fact that it has money locked in it, 15% of its market cap. What is it? Market cap is what is it? What is it indicating here? The market cap is, we don't have it. Do we have the market capitalization here? We don't have the market cap. Okay, it's not there. So okay, let's assume the float is about 4 point. Okay, I think let's see, we can get the float here. The float is okay, for some reason we don't have it here. It's just okay. Yes, market cap is 245.7 million. So to determine the amount of figure that is locked up into the stock, we have to determine, we have to find 15% of that 247 million. 245 times 15, so we're talking about 36.75 million. That is what is behind this the interest in the stock. 36.75 million. It is a lot, and by the time that is forced into the stock, the impact will be much greater than that. So why not? It's a very important issue. Money locked into the stock. Why wouldn't you follow the stock? So fingers crossed. Our price target is $6.805. Going by the pattern we have seen here, is it something that can happen? Can it extend towards that? Going by these two patterns, each time it fell below the 10, 20 and the 50-day moving average. It extended further. We can see that it happened twice in the 6th of December, and it was about to happen again when the market closed. So there's every chance that can happen again. Fingers crossed, and we'll continue to update you concerning ATER stock. And thank you very much for watching this video.